September 21st, 2024. Sorry, September 20th, 2024. Making the review on the 21st. Today we had, you could argue this was a big high two on the open, or, some traders would prefer to say wedge, 1, 2, 3, but wedge open, and then a deep pullback, trading above the prior day's high, and then a reversal back down to the range before by the close finish. I'm not sure exactly, there's always a bunch of different reasons, but just stocks going up. Intel went up a whole bunch on Friday, so that might have been a big piece, or at least a piece of what happened there. Bar one, a bull bar, but a big tail on the top and a tail on the bottom. So it's more of a trading range bar than anything else. There's probably buyers not too far below, and there's probably sellers not too far above. Bar two, consecutive bull bars. After a gap down, we're probably always in short. You can see bear bar closing near its low, 81, and then a big bear bar closing near its low would be, what you could consider the gap. You can always just look at the gap as a big bear bar. And so even after consecutive bull bars, I would say we are probably still always in short from the gap down. Whenever you get a gap down, again, think of it as a big bear bar. When you see this, what do you think? You think you should get a second leg down. So when you see this, what should you be thinking about? You should be thinking you're probably going to get some sort of second leg down. We obviously ended up getting a spike and a bear channel down, but either way. 3, bear bar, but a big tail or a tail on the bottom, so difficult to sell. Also, if you're selling below 3, 2 is your signal bar and 3 is your entry bar, so that decreases the chances of it being a very good trade. Had 3 been an inside bar, it would be a low one short, so it would probably be a more credible trade with a wide stop, but that would have been okay. But it's really not all that great to be selling below 3 in this context. I'd probably rather wait. 4, consecutive bear bars, 3, 4, good for the bears, and bar 4 closes below the bar 1 low, which is really important. The bar 1 low is a breakout point. And whenever you get a close below the breakout point, it increases the chances that you're going to get some sort of measure move down. So what measure move did we get? Well, the sell-off starts from the 81 high because that's where the selling started. And where did it end? It ended at the bar 1 low because the big tail to the downside. So that becomes your leg 1, pull back, and then you can see the bodies, bar 3 to bar 9, leg 2 measure move down. So bar 3, bear bar, closing near its low, but not really great. Bar 4, consecutive bear bars, a small tail, but it's okay to sell below 4 if we go below 4. However, you can see we didn't, which is a sign of trading range trading. So on 5, when we rallied, bears, they were interested in selling below, but they were more interested in selling above 4, since this, we're always in short, 3, 4. So when you go always in short, there's probably going to be sellers above this bear bar. So bears would rather sell above bar 4 than buy above it or anything else really. So traders sell above bar 4, and then we sell off back down to around the bar 4 close. Bar 5 has a bull body, and that is disappointing for the bears. The bears, they're hoping to get a strong bear trend. However, in a strong bear trend, does that usually start with when you get your breakout? Do you usually get a deep pullback like this that trades above the prior bar? Not really. So to me, when I see bar 5 trade above bar 4, to me that seems a lot more like trading range price action than bear trend price action. And the fact that bar 5 was able to close as a bull bar, to me, that seems a lot more like trading range price action than price action of a bull trend. So I think it's a little bit disappointing. 6, a bear bar, but a big tail on the bottom. So could just be a second leg down, 1, pullback 2. If you look for the leg 2 measured moves, they're going to be everywhere. I'm sure there's one in here somewhere. Let's see the high of that to the close of bar 6. They were kind of all over the place today. You had this one, leg 1, pullback, leg 2. So I think I went a little lower. Yeah, I went to tick low on this one. It was exact when I did it earlier. So 6, a big bear bar. Not really great to be selling the close of 6, though. It looks like we're a little bit oversold, and it's kind of hard to want to sell when we're getting bull bars or 3 bull bars so far today, and the bears are unable to trade below bar 4. So why would you want to sell the close of bar 6? 7, a reversal attempt, but a big tail on the top and on the bottom. So probably buyers below scaling in lower. However, it's really not all that great to buy above. You can't buy above 7 and stop above or below 7. If you bought above 7, you probably have to have a pretty wide stop. You can see disappointment on bar 8, and it's not surprising because of the fact that bar 7 is a doji bar. So there's probably going to be sellers above bar 7 scaling in higher if we do go higher. When you get a bad signal bar, the reversal is usually minor. You can see over here, we tried to test back down to the bar 22 high. Since the signal bar wasn't all that great, usually it's going to end up being a minor reversal up and get tested. Obviously, it still probably qualifies as a minor reversal, but obviously it ended up being a pretty large bull leg lasting almost 30 bars. So 9, a bear bar, but do you really want to sell the close of 9? Not really. It's 3 pushes down. Let's see, 1, 2, 3. So it's hard to sell below 9 because, or especially, we didn't even close that strong. So it's really hard to sell the close of 9 because it's 3 pushes down. If anything, it's probably more of a buy the close bar. You know that the bulls who bought and are willing to scale in are going to make money. So you're expecting us to bounce to at least up into this area. The sell high, max high, the bar 9 high, so maybe even the bar 8 high, we probably should bounce back up into that area. And it's 3 pushes down. So when you get 3 pushes down, what does that mean? It means you're probably going to get 2 legs sideways to up. And when you get 2 legs sideways to up, it's probably going to be about as many bars. We had an 8 bar correction. You generally expect wedge corrections to be about half as many bars as the wedge. This was, 8 bars, and this ended up being 5 or 6. So not the best example, but that is a pretty common thing when you get a wedge for the correction of the wedge, the 2-legged correction of 3 pushes down to be at half as many bars. So bears buying back shorts on the close of 9 and bulls buying the market, causing bar 10. If they bought the market, they probably had to stop and measure move down somewhere down here, expecting that we'll probably, they'll be able to make a scalp or scale in and make a scalp before we trade down to that area. Bar 10, not really great to be buying. You can see it's a wedge. So 9 is your signal bar for the wedge, but I don't really want to buy above the bear bar. Doesn't look all that great. 11, consecutive bull bars, good for the bulls, but a big tail on the top. So do I think that we've seen the low of the day at this point? Probably not. We're probably going to get a better looking low of the day than a bear bar and then a bull bar with a big tail on the top, and then consecutive bull bars with tails on the top when we're still, always in short. So I don't really think it's all that great to be buying here. 12, a low 1 short. When you're selling a low 1 short, you probably want to use a wide stop if you're not in a clear bear trend. So if you're in the spike phase of a bear trend, say we had gotten 5 straight bear bars on the open and then a pullback and then a low 1 short, that would be more credible. But in this context, it's not very good to sell below 12 unless your stop is up here, because low 1s in bear channels usually lead to deeper corrections and then trend resumption. So you can see if you sold below here and put a stop above here, it led to a deeper correction and then trend resumption. And if you sold below here with a stop above here, you probably could have scaled in on the deeper correction, knowing what the market was doing, and then made money on the second leg down. 13, disappointment. You can see buyers not too far below bar 12 because 10 and 11 pretty strong. Probably, though, sellers not too far above 12. It looks to me like 1 pullback, and then we're starting some sort of second leg up, but I don't think it's going to go all that far because the first leg was only 2 bars, so I'm not sure how big the second leg is going to be either. There's usually some sort of symmetry within the legs, and it's really not, I don't know, maybe there's leg 1, leg 2 in there. Yeah, so the 2 legs were the same size, 10 and 11, the low of 10 to the high of 11, the low of 13 to the high of 14. There's 2-legged correction is the exact same size. So it's reasonable to think that there's going to be sellers somewhere above 13. You know that the traders who sell above 12 are going to be able to scale in higher and make money. And we haven't traded above the moving average yet today. So there's going to be sellers at the moving average the first time we get there. 14, consecutive bull bars, but big tails 13, big tails 14. So not really as good as it could be. 15, an inside bar. It's a low 2 short for the bears. For the bears, they're thinking that this looks like 2-legged correction to the moving average, and I agree with them. And for the bulls, they're hoping that this is just a pullback and that they're going to get at least 1 more leg up, 9-10 being the start of a bull trend. And, the bulls, their pretty much only hope here is to turn this into 3 pushes, 1, pullback, 2, pullback, 3, and then get a breakout above that wedge. But this needs to get stronger for the bulls if they're going to get anything sustainable here. To me, this just looks, like a bear flag. 16, a bear bar, a tail on the bottom, but reasonable to be short, reasonable to sell the close of 16 or sell below 16, taking a chance that we have started the second leg down for the bears. You can see on 17, pulled back, probably not quite to 50%, close to 50%. Bears were selling on limit orders as the market was rallying on 17, and the remainder of bulls trying not to exit, taking a chance we did not trade below 17, will exit below 17. And so, or sorry, below 16. And so that's what's causing the big bear bar on 17. 17, disappointing that it was unable to close on its low. Had it been able to close on its low, it would have been a better sell. But for me, I don't like to take these kinds of shorts if they're not able to close on their lows because it seems a little suspicious in trading ranges, especially since the bulls, they're going to be willing to scale in below a bull bar like bar 10. So it's a little bit of a difficult area to be doing anything. 18 consecutive bear bars, 17 and 18. But you can see we failed to break out below the low of bar 9. Anyone who's selling, if you're selling the close of 18, your premise is that we're going to get a second leg down. So you're hoping the market either goes down far enough quickly for you to make some sort of scalp, which it would have. You probably could have made, I think you could have made 10 points selling the close. Yeah, so you easily could have made 10 points selling the close of 18. So that's one way that the objective of your trade was accomplished. Another thing you could do is use a wider stop and think that if we do start to rally, sell off from 15 to 18 is probably there'll probably be sellers around 50% pullback. And if we do reach the moving average, we haven't touched it yet today, so there'll be sellers. So you'll either be able to sell the close of 18 and make a quick scalp, or you'll be able to sell the close of 18 and scale in higher, and it's going to get back to the bar 18 low or the bar 18 close very likely. So high chance of you being able to avoid a loss selling the close of 18. 19, another bear bar. I think a lot of similar premise can apply here on the close of 19, selling for a second leg sideways to down. 20, a bull bar. It's possibly a wedge, 1-9-20, but I don't really want to buy above 20 after 5 straight bear bars. So it's really better to just wait. There's probably buyers below 20 scaling in lower, but it's really not all that good. 21, a big bear bar, but a tail on the bottom. A possible wedge, 1-9-21, but it's a bear bar, so nothing really to buy yet until we get a good looking bull bar closing near its high. 22, a bull bar, but not able to close on its high. It's definitely a credible buy above 22, but I just did not personally like the tail on the top. But 1-9-22 is a credible swing buy. As a wedge, expecting 2 legs sideways to up. It's a 22 bar wedge, so you can expect, I don't know, maybe a 10, 11 bar correction. And you can see we did get basically a 10 bar correction, into this area, and then we got a breakout above it instead of getting a reversal back down. So the bears started trying to form a reversal back down with 20, 28, 29, and then they tried to get some sort of low 2, but it ended up failing, and we got another leg up, which obviously, as I mentioned, leads to the leg 1, leg 2 measured move. So bulls, they can always in short bears will exit above 22, and bulls can buy above 22. Probably getting back to, I guess the bare minimum would be the 21 high, the most recent sell climax high. Consecutive bull bars, 22, 23. We are probably still always in short with the context, but with the context, we're always in long. So the way that the bars look, it's still always in short, but we're probably going to bounce here. This looks like a leg in a trading range. 24, a bear bar, but not worth exiting below. It's a minor reversal down. I don't think selling below 24 is going to go very well. So most traders do not need to exit below 24. You can see we traded below 24. Bulls continued to buy, and bears who sold the close of 21 scaled in 23, 24, using sell off on 25 to buy back their short, and a big outside up bar on 25. Tail on the top and tail on the bottom of 25. So maybe not quite as good as it could be, but still a bull surprise, and we're going at least a little bit higher. It's possibly a second leg up, 22, 23, pull back 24, and then 25, second leg up. So bears are hoping for a bear bar closing near its low, so that 26 is a low too short for the bears. However, the channel up is pretty tight, 22 through 26. So I think that even if we do get a bear bar closing near its low pretty soon here, it's not worth selling. 27, another bull bar, but a tail on the top and on the bottom. It's still 2 legs up, but 25, 26, 27 might be strong enough to reset the market cycle, and that might be a leg 1 instead of a second leg trap. You know that the 15 high is a sell climax high, so there's going to be resistance there. Keep in mind that on the way up, if you're in the trading range, the rally, there's going to be resistance on all of the lower highs, and when you're selling off over here, all of the higher lows are possible support. So any of these could be support. I think obviously we ended up around this area, but anyways, 27, another bull bar, but this is climactic. This is really a lot of points to move really quickly. And the Bears have a lot more bear bars. So the Bears have been controlling the day time wise, but the Bulls have the sharpest move in price, or one of the sharpest moves in price. However, I still think that we're going to be a little bit more sideways here. Sideways to up, but a little bit more sideways for at least a couple of bars, because you can see we're right around the upper third and we're pulling back to around the middle, just above the trading range. Big bar, big risk buying up here. Bigger bar, yes, buying above 22, but the risk relative to what you could probably make isn't really all that big. So reasonable, like I mentioned, reasonable buy. 28, a low too short for the Bears, but after three straight bull bars, 25, 26, 27, really doesn't make very much sense to sell below 28 with the huge tail on the bottom. You can see 29, a bear bar, but just looks like a second leg down. You can see we pulled back on 28 and then rallied on 28 into bar 29, causing the tail on 29, and then a second leg down 29. So two legs down, 28, 29. Probably sellers, not too far above 29, scaling in higher. 30, a big tail on the top. So we traded above 29 and found sellers. Back to the bar 27 close. So traders who bought the close of 27 scaled in 28, 29, using 30 to exit. 31, an inside bar, a high one bar for the Bulls. Possibly a third leg up. So we have first leg 22, 23, second leg 25, 26, 27. Third leg 30, 31, inside bar 31, high one for the Bulls. So the Bears are thinking it's three legs up and a possible wedge, and they want a reversal back down. However, the channel up is really tight. So the channel up from 22 to 31 is pretty tight. So it's probably better not to look to sell. So inside bar 31 for the Bulls. It's a high one buy. Some Bulls will buy it, but it's probably going to lead to a pullback before we continue any higher, if we do continue higher. The real question now is, are we going to break out strongly above the bar 27 high? So the Bulls tried to break out on bar 32. So you see we traded above 27, and then we initially found sellers. But we usually when you try to break out, you don't try to break out once, especially in like this kind of context. You'll try twice before you end up getting a reversal. You can see on the second try we did end up getting the breakout, but initially failed breakout on 32 and an inside bar on 33. It's possibly a wedge for the Bears, but it's really not all that good. It's probably just a bull flag. You can see buyers at the moving average 34, a bull bar, a tail on the top, but another high one for the Bulls. So some Bulls would take it, taking a chance if you're buying that we're going to get a successful breakout of the 27 high pretty much immediately. So you can't take this buy and then sit in the trade for a really long time. If you're taking the buy, you want pretty good follow through, and you want to get a good breakout above the high of the 27 high, the 32 high relatively quickly. And you do get it on 35. So 35, a big bull bar, tail on the top and bottom, but it did its job, which was break out above the bar 27 high and the bar 32 high. So we now have a breakout for the Bulls. 35 resets the market cycle. So to me, it doesn't look like a third leg up. It looks like a new bull trend, and it might get its own couple pushes up. And you can see it ended up becoming a spike and a wedge bull flag, a wedge bear flag. So a bull channel, but the bull channel was a wedge. 36, follow through for the Bulls. So had 36 been a big bear bar closing near its low, it would have been a possible failed breakout. But instead, 36 is a follow through bar for the Bulls. Buyers below 36 after three straight bull bars, relatively expected during 37. So buyers below. 38, you can see we traded above 37, but 37 is a high one with a big, that's a bear bar. So probably not as many traders willing to buy above 37. 38, a bull bar, but this is kind of high in a possible bull channel. To me, once we trade below 36 during 37, we've now entered the bull channel. So the bull spike was really just one, 2 bars. Now we have a pullback. So to me, this is the start of the bull channel. So not really all that ideal. However, you can lower your risk a lot. The probability now is not as great that we're going to go that much higher, but your risk reward drops a lot because you can just put your stop below the bottom of the bear channel or the bull channel, risking 4 points rather than putting it somewhere down here where you're risking like 10. So as your reward gets worse, your risk gets smaller. 39, another bull bar, but it's a doji bar, so probably sellers not too far above. 40, another bull bar. You can see we were back to the bar 2 close. So if you were a bull and you bought the close of 2 and you just continuously, scaled in, you would have been able to make money during bar 40. But 40, not really a great buy the close bar. Doji 39, and the breakout not that strong, 38. So probably a second leg up from 37, 38, 39, or sorry, 38, 39, 40. Yes, but I'm not sure how much of a second leg up we're going to get. 41, a doji bar. So we have, what do you notice, right? We're getting doji bars 39, 41, 36. So it could be spike or, bull move, pause, bull move, pause, bull move, pause. Could be some sort of parabolic wedge on a smaller time frame, but the reversal is likely minor. Bear bar 42, but probably buyers scaling below, scaling and lower. I'd imagine the bulls who bought below 41 are probably going to end up making money. 43, rally back to the bar 41 close. So the bulls who got the close hoping for a breakout, disappointed, and exiting. 44, a bull bar, but no one really wants to buy above 44. It's still making higher highs, 36, 38, and 41, and higher lows, 37, and now 43, but it's really not all that, it's obviously not all that great. 45, consecutive bull bars, but only one big closing near its high, and you're buying high in what you know is a trading range. So if you're buying, you're taking a chance to break out at the top of the trading range and get a measured move up. It's not really all that likely that that's going to happen. 46, consecutive bull bars, but probably buyers below 46, you can imagine scaling in lower, but not really all that great. You can see we ended up making a double bottom with 43 and 48. So 47, a bear bar closing near its low, but I don't want to sell. 46 is your signal bar, and you'd imagine we're at least getting back to the 46 low. 48, a bull bar, but not really worth buying. It's a double bottom with 43, so maybe you could argue double bottom, bull flag, and you want to measure move up, but I don't really know how likely that is with the big tails on 48. Probably not very. 49, consecutive bull bars, but wedge channel, 40 and 46, and now 49. So any bear bar closing near its low is a wedge channel. 50, disappointing. Bulls probably have to get out below 50, or definitely below 51. 51 is an outside down wedge channel, better signal bar closing near its low. Bears can short. It qualifies because it's a trading range, and what is it? It's a small risk, and it's high in the trading range. So when you're in a trading range, you want to be buying bars that have lower risk, low in the trading range. So we're well within the lower third here. You can buy for a move somewhere into the middle third, and we're well in the upper third here. You can sell small risk to get somewhere into the middle third. 52, disappointing follow through. Doji bar, but still 3 straight bear bars. 53, a bear bar, but after a pause bar, I'm not sure how much lower we're going, and then a reversal attempt. 54, but you can see it's 3 pushes down. One pull back, or sorry, 1 pull back, 2 pull back, and then you can see we got a breakout below. This, it's kind of trying to form a wedge on a lower time frame, but you can see we ended up getting a breakout below, and it became a measuring gap. And sometimes you'll get a measured move 2 times the size of the measuring gap. So you can see if you take 2 times the height of these 5 bars, that's where basically the 57 low is. And that's why one of the reasons we bounced there. 55, a strong breakout below, making this look more like a measuring gap than anything else. We close this gap, and we're testing basically higher lows now for areas to bounce. 56, consecutive bear bars, 55, 56, probably at least a small second leg down. 57, a bull bar, but not really worth buying. Bulls were hoping bear trap, and you get a bull bar closing near its high, 57, but big tail on the top, big tail on the bottom, really not worth it. 58, a bear bar closing near its low. You sell below 58. I don't know, you probably could, considering the fact that we're always in short, but it is just a bear doji bar. So it's not really, this is, it's a low one short, but it is in the spike phase, 54, 55, 56. So it's a little bit more reasonable. 58 or 59, bear bar, but tail on the bottom, still always in short. 60, another bear bar. We're still always in short, and you can sell any of these closes, but now you're selling relatively low in the trading range. 61, another bear bar, but again, you're selling pretty low in the trading range, but still always in short. Okay to be short. 62, a reversal up. You probably don't have to exit above 62, considering the fact that we haven't traded above another bar since here. So we're in a 13 bar bear micro channel. So we probably have to test back to this area at some point. 62, a bull bar, like I said, but 13 bear bar microchannel. You could argue it's some sort of high too, since there was a reversal attempt up on 57, but not really that great for the bulls. 63, a bull bar. You can see we traded back to the 61 low. Bears bought back shorts, and that's part of what's causing 63. 64, three straight bull bars. So a lot of times after three straight bull bars, especially in a trading range like this where the bear trend isn't all that strong and the argument's not all that great for the bears, the bears give up. And so we have three straight bull bars, 62, 63, 64, and then bears just gave up on the idea of a bear trend after three straight bull bars, and that's what caused the 65. 66, another bull bar, but tail on the top. So really, again, not as great as it could be. We might have to get back to the bar 54 low since we created an open gap here, and gaps are going to close in trading ranges. 67, an inside bar. It's a high one for the bulls, but I'm not going to buy above a bull bar. I'm not going to buy above this high one, so probably buyers below. But we might have to get above the bar 55 high is its own sell climax, so that's a target. Obviously, there's going to be buyers below 67 after five straight bull bars. Or six straight bull bars. So buyers below during 68. Inside bar high 169, probably getting a second leg up from 62, 63, 64, 65, 66, 67. And 70, another bull bar, so consecutive bull bars, probably going at least a little bit higher. And 71, huge tail. This was somewhat of a buy the close finish. Obviously, inside bar high 172, buyers below during 73. Then 74, 75, rally to a new high, basically testing yesterday's close, and then we sold off into the close. So for stop orders today, not a lot of great ones. I thought if you had a stop above the high of the day, you could sell below 12. I thought 17 was fine, but not great. 22 was fine, or 22 was good, great context, but the bar was disappointing. You could probably buy above 34 or buy the close 35. Really hard to want to buy any of the other things. You could sell below 51. I don't know if I'd sell below 53, maybe. And kind of hard to want to buy. Probably better, limit orders a little bit better today. It's hard to sell to close at 60 or 61. Limit orders of selling above 4, buying below 24, buying below 36. Probably buyers below 67 and 72. That'd probably be it. The daily chart. So you can see if we keep getting, I'll turn on extended hours. You can see bears are hoping that this was just a bull trap and that we're going to get a bear bar closing near its low, but not able to close near its low. So probably a minor reversal. However, this is a buy climax, right? It's a pretty clear buy climax, possible third leg up. We're probably going to test back down to this area. So I'd imagine we were going to test back down here. The weekly chart, a bull bar, but it's looking like it was just a second leg up. This is not a super strong bull bar. So if next week looks like this, or the September 9th week did, if the following week, the September 23rd week looks that way, then increased chance of some sort of bull trend, but probably will not end up looking that way. In the monthly chart, we're headed into one of the last weeks of the month. Bulls want a bull bar, and they want it to close above the July high. So they want it to close at basically an all-time high. And the bears are trying to get bear close. The open of the week is only 40 points below, and there's a lot of time left. So we still very well might get a bear close this month. All right, that's the day.